Hello everybody, welcome to the TraderMerlin Show. It is your Thursday edition, getting near the tail end of the week. I'll leave it to be for some bad news, some bad economic data to cause this market to fall aggressively in the early hours, then all of a sudden just say, you know what, let's just erase all those losses and almost end up back in positive territory for a lot of these market indexes. Pretty crazy trading session out there today, which we will be talking about, I am sure. Hello all of our regular viewers out there, Tom, Terry, Zach, Josh, Big Eb, and Jorge as well. I'm sure many others will be joining us here shortly. All right, the topic for today, we were kind of trying to figure out what to discuss on today's show, and I received a question from, let me get the gentleman's question to start this all off, and then I'll transition to our guest. This was the question. It says, as a shorter-term trader, do you target specific sectors to trade? And I thought, well, you know what? We could probably turn this into a much bigger topic than just short-term intraday day trading. I thought it might be beneficial to look at things from this perspective, which is, how about scanning sectors altogether from kind of a macro picture, and how do we use that maybe on an intraday basis as well? Of course, here to help me make sense of it all is the lovely and talented Tillie Allison-Harris. Tillie, how you doing?
Great, glad to be here. I was just making a post that we're going to talk about sector analysis and trading.
Sweet, bring it on. We love sector analysis and trading. Now, I guess we could go back to the classical models. I'll bring that picture up for the viewers out at home. There is this classic sector rotation model that a lot of people fall into. And for those that may have never have seen anything like this is something that doesn't happen all the time. It's just historically there are these patterns where the market is generally leading the economy, and it takes, basically you have the analyst forecasting the future, and that is trading the market, and then the economy maybe catches up later on. And so there's always this kind of leading with the market, and the economy follows second. And there's periods of time where different market sectors, such as at a market top, we've got basic materials, energy, and staples tend to perform very well. Well, right now we're in a situation where basic materials and technology are just booming. Well, that's strangely enough near a market bottom or the beginning of a bull market. So we'll break some of that down, see what's myth, what's real. Tillie, let's talk from your perspective on how you use sector scanning or maybe even rotation model.
Okay, great. So leave this rotation model up because I have forgotten exactly what order things are supposed to go in.
There's a lot of info in there.
Order.
Yeah.
And I really, I think we all know that history rhymes. It does not repeat itself. So kind of knowing these historical relationships is helpful, but we really just want to see what it is and then think about, the fact that last week the strong sector had to do with transportation, industrial, production type stuff. How would that impact us if that's on the rise, and that would be bullish? So I think these historical models are great, but they're not exactly correct. And any of these one given groups can lead, and things are more innovative today than ever. And I think that model was discovered quite some time ago. So recently we've seen a lot of changes. The healthcare sector has changed tremendously. So we really want to look at, have these sectors changed? There used to be only was it 9 or what was it, 8 originally? How many?
The individual sectors, yeah.
Yeah, so the S&P 500, the spider, one of the reasons it got its nickname was because of the amount of legs on a spider and the amount of groups in the index. I know that's kind of funny, and then as they added more groups, I think we have now today a total of 10, maybe 11. Yeah,
there's a bunch of them out there. And I think the challenge, Tillie, is when you look at a sector model like that, things change depending on not just the economic times, but also the political times. And a certain party could come in and say, well, you know what, we're really going to support healthcare. And that may actually be during a bullish phase of the market. So sometimes these things do get out of whack. And I didn't want to put too much emphasis on that sector rotation model, other than to say that there are some historical patterns that we do see repeat. Like obviously, you can see on the chart here, I'll bring it up again. You see at the very top, you got consumer staples. Okay, well, yeah, that's a sign of a market top. People are buying market staples. Okay, fine. We're still going to be buying toilet paper and toothbrushes. Utilities near a market bottom. Well, look, we're not going to be cutting back on our utilities, so to speak. So I'm not a huge fan and believer that these things are spot on, but there is a historical merit to them. Now, let's talk about it from a different perspective, because I know that you go out there on a regular basis and are looking let's just say under a microscope, really, what those sector rotations are looking like, maybe not just on the monthly or weekly, but also on a shorter term time frame. How does that work for you?
Absolutely. So before we go there, let's talk a little bit about history, because anyone out there who's ever studied history, everyone always says If we fail to recognize history, we're kind of doomed to repeat it.
Yep.
And really, the relationships that are most obvious when one is actually taught what it is, it's pretty easy to recognize. So way back when, in the late 1800s, when Charles Dow, editor of the Wall Street Journal, that we very well all know today, the Wall Street Journal, the editor of the Wall Street Journal was actually a technician. He studied the price of like companies back in the day, 1800s, and companies back in the day. What do we have? Like railroad companies,
Right.
all across the U.S., and then production companies like factories. And so Charles Dow wrote in the Wall Street Journal, but he couldn't be too specific, to guide investors to do research and study the production. And how can you actually study production? Well, you can't walk into a factory, right? Like we can't walk into the New York Stock Exchange and go in the server room and look at all the order flow. But how can we do research? And back in the day, it was you take a train ride and you stop at different railroad companies and you find out how they're doing. Because if the railroad companies were doing good, then what did that suggest about production?
Mm-hmm.
So Charles Dow suggests to track performance of one industry and think about how it would affect another industry in real time. Because if we wait for the quarterly reports, if we wait for the earnings reports, we're getting reports from 3 months ago. So he encouraged readers to do that, but he could never come out and tell someone to do all the research by themselves because, of course, who owns the Wall Street Journal? And so from that insight, we gain the ability to look for these types of relationships in today's market.
And that brings up an interesting question on that. You talk about Charles Dow. Do you have a take on Dow theory? Is it something that finds its way into your analysis of the markets?
The trend analysis that we all do today, looking at highs and lows, that is the basics of, quote, Dow theory. Mm-hmm. Now, I don't study Dow theory to a T because I believe that the work that he did was compromised. The fact that he never published anything, and only after he passed away in 1902 did one of his assistants publish some of his work. And so I believe that his work was skewed, and that Dow theory, what it is today, may not even be the real, quote, Dow theory. But obviously the logic is that we have trends with higher highs and higher lows. And when lows are broken, that suggests that the value of that stock is declining. And we can use that as a leading indicator rather than waiting for the fundamental reports.
Yeah, I'm not a huge fan of Dow theory myself. I mean, I think that there's merits to it. I think as markets evolve, so should Dow theory, and that concept of sector rotation combined with trend. I think we can always be building on it. Now let's fake news even then, right? Tillie, talk about some of the resources that you like to use. I know that I have specific sets of tools that I like to look at when I look at things like sector rotation or even just going into a day trading basis. Sometimes I'm looking for whatever sector is moving the best at any moment in time. And I know you have some tools and resources that you thought might be useful.
Yeah, awesome. So a lot of softwares out there have like things that we can do like after the open, looking for leaders after the open to determine strength for that day for real short-term trading. So let's link that to a said group. And how do we find that group? So say, for example, we run a scanner for the day and it happens to be in technology or it happens to be in industrials. Knowing the day before or the week before if that group is stronger or weaker can be kind of a big odds enhancer. So an easy way to find out what groups are leading and lagging, the website FinViz, Financial Visualization, is a great website. It incorporates a bunch of different research, and I remember my mentor years ago, who has a nickname called Green on the Screen, told me that FinViz revolutionized trading research, that traders had to go to dozens of websites to be able to pull out this information. So FinViz, F-I-N-V-I-Z, free website. Aside from all the pop-up boxes that are a little bit annoying, it's a fantastic website. Mm-hmm. And whenever you go there, there's a heat map in the lower right-hand corner, and whenever you maximize that, it shows us what's happening in real time. I think there may be a 10-minute delay, but it's still so important because we can see what's happened for the day. Mm-hmm. So the heat map there, if you click on it, you can maximize it over on the bottom right.
Yep, I've got it maximized.
Perfect. So just for anyone who's also wanting to follow along and use this website, it's fantastic because it really brings to our attention. You can see clearly the different groups: technology, communications, cyclicals, consumer defense, healthcare, financials, energy, industrials, real estate, utilities, and basic materials. And the lower right, there's a scale there, and the brighter the red, the more bloody, the more bearish. And I have to be careful with that because in my mind, the darker the red, like the worse it would be. But right. Anyway. They make the Rider Red tongue twister more bearish. The brighter the green, like more bright green, is more bullish. And we have to realize that the time frame is just today. So basically on the close today, we can see, who's getting hit the hardest. Facebook got hit pretty hard. They got a whack in the face.
Oh, Tillie.
Yeah. And taking it from a bigger perspective, looking at more weekly. So we really want to realize that what happens today is a result really of maybe what happened a week or two ago. And so looking at what's been happening, today's Thursday, going into tomorrow, looking for what stocks are leading and lagging can be very helpful for a good sentiment gauge. It just helps investors and traders get a better idea of why the market is doing what it's doing.
Yeah.
So I like to go to the weekly performance.
All right, so I'll switch over to weekly performance. And one thing I want to point out here, guys, is you might not know what the different sectors are. This is a great, and I'll show you a couple of different resources to help understand this, but this is a pretty easy one. You notice, let's say you don't know who are in the industrials category. Well, if you click on industrials here, you can see that there's special industrial machinery, you have railroad companies, so it's kind of broken apart by sector, and you get a sense as to what stocks are in that specific segment, which I really like. You notice here when I click on specialty industry, industrial, it runs down not only the chart for the day, or I think it's for the day, but it gives their price and also the price percentage change for the day. So if you're looking for something that's trending, this has been a great resource for me.
Absolutely, and it can. So here on the weekly performance, we can see the real strength. Who's the strongest.
FANG stocks. There you go.
Obviously, our typical FANGs are not as strong as they were, but they're still pretty strong. And we're at all-time highs again. So what we really need to see come into the market is these FANG stocks. And I remember, what was it last week, industrials? Mm-hmm. I think industrials were starting to show more strength. You see home improvement, that's like a subsector there under consumer cyclical. The more strength we see coming in, we have a better chance of breaking the all-time high. Because isn't that the question? Is, NASDAQ again cycled. I don't think it broke its all-time high again. So what we're really looking for is who's going to lead us out of this. Mm-hmm. And, whether we're trading real short-term intraday or holding positions for the quarter or even longer, knowing that these particular stocks are the ones that are going to lead us, some of it's obviously going to be day trading, whether they're trading with leverage. I read a comment that someone's all leveraged up.
Oh, yeah, Brendan, he's all leveraged up in gold, silver, and cryptos, yep.
Yeah, so a little different ball game there.
A little bit.
And, I am I'm relatively conservative. I trade a lot of S&Ps. I love the S&P 500. I'm just that girl that says, hey, if you can just invest and trade the S&P 500 and outperform mutual funds, hey, you're doing great, right?
Yeah.
But a lot of people are, it sounds like some of you guys really love volatility, and we have a name for you guys. I'll say cowboys to be politically correct.
Well, some people, Tillie, are looking, and I think this is where it depends on your goal or objective. You're not looking for the huge rates of return. You're looking for consistent rates of return over time and compounding it. Some are looking for those greater rates of return and taking bigger risks accordingly, which, I don't have a problem with that as long as everybody understands that that's what there's a potential to have some big drawdowns. And, it's just different strokes for different folks. So good on them.
Yeah. What I do love is they are, I think, ETFs. So they won't go to zero.
Well, you never know. Tillie, after what happened with crude oil futures back in April, I will never say that the lowest something can go is zero. That completely just blew my mind how we were at negative to such a huge degree. So, yeah, I don't think it can go just to zero. It could go lower. You never know.
Right. So that's why I really love stability. There's nothing more stable than the S&P 500. It was designed for that reason. Whenever we look at what markets we have in our portfolio, if we're looking for stability, the S&P 500 was designed for that, choosing the best companies that have the best performance over time, and then replace if they don't perform well. And then we can always add some icing on the cake by, using NASDAQ, the tech companies. Tech companies always tend to lead and lag, so that can be a little more volatility and it can increase rate of return as well.
Yep.
And then obviously commodities can double or triple that. So if you overlay your strategy with whatever products are more volatile if you're looking for that enhancement, or just something a little more stable if you just want more stability.
You guys are great. Brendan says, S&P, conservative. Tillie, you're wild in my eyes.
Right.
Well, the reason we say stable, it's not that it's that much more stable, but are you more likely to see in one day a 30%? If I were to outlay 3 asset classes, you can put them in order, guys. You have 3 asset classes. Which one are you most likely to see a 30% drop in one day? Bitcoin, gold, or SPY? You can put them in order. I'm pretty sure everybody will come up with the exact same list. Which are you most likely to see a 30% drop in one day? Bitcoin, gold, or S&P? And put them in order. 1, 2, 3. I've got mine in my mind. I'm gonna let you guys stew. I'm gonna let you write that one down. Tell you what do you think? I'll let you answer it first. What do you think? Which one's most likely to drop 30%?
Well, most importantly, I know it's not the S&P 500 because it has a limit lock trigger at 20%. Boom.
There you go. See, I like that. You're like, I'm not even going there. But yeah, Bitcoin probably would be the most likely because it's illiquid, right? I think Joseph nailed it right there. And I think everyone's going to get that list, right? Bitcoin, gold, and S&P. Now, there's just certain risks associated with those. And I would probably put myself in the middle category because I like to take on a lot of risk. I have a lot. But Tillie's right. She knows that if the S&P drops 30% in one day, which it cannot because it'll be lock limited down at 21%, still a 21% down day, you're in deep doo-doo. There's some major thing happen in the world that you're probably not worried about your portfolio anymore. That's that's a catastrophic event that would drop a market 21% in a day. Whereas Bitcoin, I've seen that happen dozens of times already. Gold, not as much, but certainly it could happen depending on some central bank, like happened with the Bank of Swiss National Bank a few years back. Crazy wild moves out there. So anyway, just wanted to clarify that because I know that Tillie is generally looking for not the safest investment. I mean, it's not the safest, but out of those 3 I mentioned, it is, and it's going to give you some stability there because of its diversification. There we go.
Yeah, well, I can't go to fixed income because oh my gosh, that won't even offset inflation, right? And the cost of living. So let's talk about what markets are out there that would be considered stable, safe. So first of all, I'll build my case on the S&P 500.
Okay.
How many people have a 401k plan? And how often does money flow come into that market that will prevent it from dropping significantly on any given day? And the money flow coming into the market in this fixed income or diversified portfolio that everyone has, whatever percentage going to fixed income is highly correlated to the S&P 500. So we can gauge its movement quite systemically. And that puts it in the category that would be considered quite safe. And we really can't compare it to anything else because fixed income, which is considered conservative, we certainly know isn't going to hit a 10% or higher return. Mm-hmm. So that's kind of why I'm choosing the S&P because I think it's the best of the best out there.
Right.
And for anyone looking for that stability with a 10% return or greater, I think we can get that in the S&P fairly consistently. Mm-hmm. And I'm sure we can get high flyers and more volatility in commodities or currencies. But I'm not I really don't like to drive a 5-speed or a 6-speed, and that's because I don't like to. I can, but how many of you like to just put the car in cruise control and kind of let the transmission do its job?
Like that. And Big Ab, you're right. He says, but Merlin asked the same question about what could go up by 30% in one day. It's the same list. Absolutely. But I think you would all agree with me. What's more important to your portfolio? Something going up 30% or something dropping 30%? I only care about the drawdowns because in my experience, in my time, when you are in a winning trade and things just run, then sky's the limit as long as it's running. I just cannot let something run against me because then I'll spend way more time trying to get back that percentage. Remember, if the market drops 50%, you're like, oh, well, I just have to make 50% to get it back. No, you have to make 100%. So I cannot let those drawdowns hit me. So that's the main important factor for me. But again, everybody can trade whatever they like. You just got to know that these things could happen, and they come out of nowhere in Bitcoin because of its illiquidity. It's I have a sizable position in Bitcoin. And it's rather entertaining watching it. All of a sudden, you're like, whoa, what the heck happened? And it really was not a big event, but it moved it so much. Let's shift away from the discussion of cryptos, etc. I want to show you guys a couple different resources. Tillie mentioned FinViz, which I think is great for anybody who might not know the sectors, the breakdowns, and the relationships. I use, as you guys know, TradeStation. I just like using their sector tool. well, it's not really a sector tool, it's just a price comparison chart. And this is the one that I built for myself with the sectors that I think are important, such as financials, energy, healthcare, industrials. And I can change this from any point. So if I want to see for October, what is the best performer, I can just simply click right there and say price percentage chart from here. And we can see, as I zoom in, that for the month of October, I have, believe it or not, energy is the lead performer, up 6.4%. And that's good considering for the year, it's down over 50%. So if I'm looking for the leader right now, all of a sudden energy might start to make a compelling argument for me to go buy into some energy. And I'll show you what I was just talking about. Let me show you from January 1st so you guys can see how badly beaten down it has been. So here's January 1st. I'll do price percentage chart from there. And you guys can see that the worst performer by a huge margin is energy, down 49%. So this is kind of nice to see those relationships and see kind of what's the lead dog over a specific period of time. But I built all that in TradeStation. If you want it for free, you have things like FinViz here. You also have at, this is at TradingView, has an interesting breakdown where you can go and see all the companies that make up sectors. And if you go to barchart.com, you get probably the equivalent of what you saw in TradeStation, which is a comparison of all those different sectors. Of course, this just goes back 1 year performance, and it also shows you different percentages and moving average percentages. So it's a nice resource and tool for anybody out there. If you want specific links, just let me know, and I'll type it into chat. So healthcare on the list depends on which. Where's healthcare on the list? I'm not sure which one you're talking about. On mine or in this one here, right? It depends on. Healthcare is going to be over here on FinViz. There's your healthcare plans. You've got the whole sector of drug makers and manufacturers, which when Larry and I do our presentation on the presidential election here soon, there will be a lot of talk about healthcare and drugs, of course. All right. So
I'm going to have to watch the recording because you just said something about a sector that might be offering some opportunity, and you went kind of fast. I'm just saying. I'm to my fingers and can get like orders in like there's no tomorrow, but when like comprehension comes in, you went really fast there. So
Tillie, you've known that for a long time. Yeah, I don't have healthcare on my list, but if you want, you guys, I can just go here. I'll show you healthcare, because you know why it's not on there now? Because I don't really trade drug stocks, and I find myself drugs and pharmaceutical stocks are blacklisted for me. I told you guys that. There's a reason in my past. It's beat me up so bad. I just said, screw you, I'm not trading healthcare anymore. But if I wanted to, I could just simply go insert symbol and put in XLH, add that to my plot. Databrick, what?
So I like the comments about real estate and financials. I like real estate. I think real estate is a viable, inflation protected, so-called fixed income, if you will. I like the questions about that.
Mm-hmm.
I never really ran all the numbers until, you guys are going to think I'm crazy.
We know you're crazy. It's all right.
Yes, I am. So I lived in 4 time zones in 10 years. And so those of you who have been with Online Trading Academy for a number of years know that I've taught and I've lived literally all around the world, and I never bought a mortgage. I refused. Like the thought of having a mortgage to me meant that I had to maybe live in a place for more than, I don't know, if I wanted to leave, I want to leave. So I kind of always ran the numbers and thought, well, if you own a property, you have to deal with maintenance, you have to deal with, and then if you rent it out, you have to deal with tenants. But finally I did it. Finally, I bought my first investment property. I kid you not.
Wow.
And I ran all the numbers, and I'm like, okay, so now I just rent this one out, and then I buy another one, and I buy another one, and I run the numbers, and yes, real estate is amazing. But for anyone that's ever lived like I did, traveling the world, living in a suitcase, you called your suitcase home. And real estate, I always thought of it as kind of, a lot of responsibility, right? But once you actually, for my first time and ever, last year, I bought a vacation home, and I'm like, okay, wow, this is amazing. So I own my first real mortgage, and I'm like, this real estate thing is great. If we can get 10 of those and rent them out, right? They'll pay for themselves in 10 years roughly, and we're good to go. Yeah. But it does take a significant amount of capital to be able to buy into them, to put that 30% down.
And I'm going to read the comment here from Brendan. He's right. He says house equal liabilities unless they cash flow. And that's the key. I mean, if you're living in it, obviously there's an implied benefit for you. But if it's something like Tillie said, a vacation home or some of the other properties that I have owned in the past, if you run all those numbers, and this is why it's so important to run the numbers, if there's negative cash flow, it's like your personal life. If you're running a negative cash flow each month, then you're just going to go deeper into debt. There's no point. Well, they're paying my mortgage. No, you should be making positive cash flow every month on those rentals. Good news is right now, because mortgages are so low, it's very easy to get positive cash flow because rents are getting higher and higher, and it doesn't cost as much to get the mortgages. All right. We had rentals a few times. We got tired of dealing with tenants and damage. Oh, yes, Lori, the customer's always right, huh? Tenants. I'll give you guys, I know I'm totally off topic here, but I got to tell you this story. I had a couple of rentals in Austin, Texas, and they were what was called Section 8 housing, which is welfare. Don't ever get into that category because for the most part, they just don't care. So one of the guys got evicted. It was a total pain in the butt, like Lori says. It's a total nightmare. And we went in to redo the apartment, or the condo. It was a 2-bedroom condo. This guy had gone in and used Playboy magazines as wallpaper. Not only did he just adhere to the wall, but he used wallpaper glue. And in the bathroom, every surface of my bathroom, except the mirror, was covered in Playboy magazines and wallpaper glue. So basically, their little $400 security deposit they had to pay, that didn't even come close to covering a whole new bathroom. So yeah, I'm not a big fan of tenants myself. Hashtag screen your tenants well and get a credit check.
Yes. Section 8 housing, that would be a negative.
You live and you learn. It was great for a long time, but boy, man, they just did not care at the end. So let's bring this back and need a Glock in those neighborhoods here, all right? I'm going to bring it back a little bit to the shorter term stuff because obviously, as you looked at that list, guys, I actually did have healthcare on there. It was just in this cyan here, which is XLV. I had it on there for someone else asking me for some screenshots. I normally don't even look at it, to be honest. That is actually down 0.76. I think utilities are actually they're double cyan colors. Oh, actually healthcare is up 4.6. Yeah, it's on there, but I don't generally look at it. I generally look at the ones that I trade actively. So, technology, industrials, that's fine. Financials, energy, I'll be trading those things regularly. And the reason for it is, this is obviously on a daily time frame here. But if I wanted to, I could bring up something like a 5-minute chart. I know this is going to seem insane, but I could bring up a 5-minute and say, all right, from the open here.
Stays low.
What's that?
Let's just go stays low.
Well, I'm going to see. We go right here. Today, energy was the big dog. So that would be one that would be more likely to get my attention because it broke away from the pack right around 8 o'clock this morning. Everything else kind of stayed in the herd. And you generally will get this, guys. You're generally going to get something that's far exceeding the S&P 500's performance, which is in black. And then you get others which are grossly underperforming. And if I'm looking for shorts, I'm looking for the underperformers. If I'm looking for longs, I'm going to look for the overperformers using the same tools, just on a smaller slice of the pie, if you will.
Yes, and that's really important to wait for. Merlin is Pacific time, and they're all a little bit slow there.
Yeah.
Right? East Coast, they're a little fast. So, Kansas City time, Texas time are right in the middle. And we want to wait a good 30, 45 minutes until after the open. So there's like a real trend or reversal happening so you don't get caught in the crossfire. Mm-hmm. Do this analysis too early, you will be too early. And we know how that just sucks. So if you're too early to a party or too early to, your graduation or too early to dinner, it's just no fun. You just sit around and wait. But problem is people don't wait. They get caught in the crossfire. So this type of analysis has to be done a good 40, 45 minutes after the open to be safe. And you missed the first, bounce or whatever the day. Yeah, but we're not talking about the trend of the day. Mm-hmm. A much bigger move.
The chat here is great. You guys are awesome today. I'm loving it. Let's. This is different. It's not sector related. I thought it might be interesting because you have Apple coming up with earnings in a couple of weeks. Obviously, guys, next week is just an amazing week for earnings. You have, I believe you have 3 what I'll call popcorn trades of the day. I know you have Amazon next week. That's on Thursday. You have Tesla. It's going to be on Wednesday. And on Tuesday, there's some other huge name. I cannot remember. Maybe it's Netflix on Tuesday. So you got some pretty big movers. But bring up a chart of Apple real quick, Tillie. Here is I have the daily for the viewers out at home. And Naum says, what's your opinion on Apple hitting a new high before earnings on the 28th? So it's not too far away, right? We're at the 15th right now, so you call yourself, let's say 2 weeks. Right now you're at 120 on Apple. All-time high here is 137. So it's only $17, which is still, it's over 10%. What are your thoughts on potentially Apple breaking that high by the 28th?
And by the 28th, breaking the high? Well, all right, guys. So it's trading at 123/4. It doesn't look too crazy bullish at the moment. So I'm on a weekly chart, and I have to change the time frame. My chart, set the link up real quick.
No worries. I'm switching it over to whatever you're looking at. So I got the weekly up here as well.
So first of all, take a look at the weekly, and it didn't do too great off of the high. I'm just saying.
Mm-hmm.
So,
but that was the split, right? That's the day that it split on that weekly. So it just shot up there and just came falling ever since. Well, not ever since, but
it does on a 240 minute. So I use the same time frames I use on the spiders. I use weekly 240, 60. And it has rallied obviously today off of that low, and it's got a lot of selling at 124, so it's going to struggle at 124, and depending on what happens there. So guys, like, all we know is that it's trading at 120.70 right now, and there's a bunch of selling up at 123.75. And though if it does break that high, then it has the potential to go higher. So I would anticipate it will struggle there close to 125. Mm-hmm. And if the trend continues, which it likely can, then it will go higher. But what's the time frame we're looking at?
You got 2 weeks.
So it has the potential to do that. But again, I would only be anticipating it to attempt to trade to 123.25 first and then go higher.
Yeah, I don't see it. No, I don't think Apple will do it. I mean, certainly Apple can do it. What I think will happen is it'll probably drift up in anticipation of there being good earnings. I think that on the earnings announcement day, it will break that high. It'll probably have a big gap up, and if I could trade Apple, I would be buying puts as soon as I could on the morning after, or even just buying shorting shares outright on the earnings announcement in the after-hours session, because I've done that on a lot of these FANG stocks in the after-hours session, because they have these huge swings up in the supply. My guess is Apple will come out with some crazy, amazing numbers and news about the iPhone 12, and you'll see this thing jump up above that 135 mark on the earnings announcement, and then not crater, but certainly fall from that point. That's just my guess. But I don't think you'll see it break the all-time high, which, as I pointed out, was 137.98, so we'll call it 138. I don't see it happening in 2 weeks, but anything else can happen. Raj says 95 is attractive. I'd agree. Unfortunately, I can never trade Apple again, so I'm done. My analysis is moot at this point because I can't trade it.
Oh, no. I like 115.
Like 115? Yeah. A little closer.
Yeah. So I do know a lot of people that did buy in before that, near that split. Mm-hmm. And I'm happy that, people love Apple.
Yeah, good for them. All these nerds and their Apple Watches they can't stay off their phone. They got to stay on their Apple Watch all the time now. All right. Adam says if Apple gets to a new high, so does NASDAQ for sure. I think after the split, it changed Apple's weighting in the NASDAQ 100. I'm not 100% sure. I'm 99%. Let me see real quick. It's tough to sit here and talk and type at the same time. But I just want to show the NASDAQ weightings here. You can go to something like Slick Charts. We'll have that for you. Apple is still the heaviest weighted at 13%. So it's 13% for Apple, 10% for Amazon, 10% for Microsoft. So Apple still is the heaviest. So if Apple had a run like that, which of course, you look at it breaking 138, that's going to be an $18 move from this point. That's what, 16, 17% off the top of my head? Yeah, that's certainly going to bring up the markets. You have Apple run that much in 2 weeks, it's going to have a big impact. But I don't think it'll happen before the earnings announcement. All right, Tillie. So, we were talking about sector. Look, I got a couple questions I thought might be nice to get to. You want to answer some questions?
Absolutely. And also, we have to go back to that sector that you mentioned. Was that a leader sector? Did you identify a leader?
A what?
Earlier, were you talking about one of the sectors that was likely going to be leading soon?
Oh, yeah. We were talking just right now. If you look at, it was energy. I was talking about it on a daily basis. So if I'm a day trader, when I'm sitting there in the zone, I'm just doing nothing but day trading. I'll be looking at those types of things to see. In that example, we had the 5-minute breakout on energy. That was the best performing sector of the day. And we could see it happening much earlier than the other ones. So if I'm looking for strength, I would have been riding that one all day.
Right on. And on the weekly, 240, and everything looks beautiful there. So boo maybe for Apple, but yay for energy. So that's beautiful.
It's about time. Energy's had a tough go of it. This question came in from Scott, and this is actually based off of, I think, last week's, when you were on the show last week. He says, I'll bring it up for the viewers, I understand that the 24-hour data and levels have their place, but is it better to draw your levels using the cash market? So would you be more inclined to use something like the SPX or use the S&P futures to draw those levels off of? Because I know you use SPY.
I use the spider. I think it's the happy median. The spider is the cash value of stocks, and I like the spider. So I use the spider. That's my point of reference. I truly believe that whatever product someone is using, if they use it consistently, their deviation is going to be accurate. So I get a little bit cross-eyed with the futures market, with the 24-hour data. I don't see as much stability because of all the data. So with the spiders, I can clearly see highs and lows and opens and closes, no question.
And gaps.
We know there's going to be a tremendous amount of inventory there because of regular session. And I believe that the spiders and the cash market are extremely high correlation. You know, the relative amount of volume, if you will, at the highs, the lows, the open and the close, that would be accurate.
Mm-hmm. Yeah,
You gotta watch out for those 24-hour markets because there's so much money flow coming in and out. It's kind of spread everywhere, and it's hard to pinpoint where highs and lows and opportunities are.
Yeah, and there are some tools you can get for that. The question from Raj was, Tillie says, where do you check money flow for ETFs? There's a matrix, the dome or the matrix or the ladder that some people have on their platforms. That's kind of nice because it'll show you kind of where the volume happened on the transaction. So it'll tell you kind of where that dollar-weighted average cost was for that security for the day. It doesn't necessarily do it for weeks or months. There are some sites out there where you can get that information. But some of the domes, matrix that you guys will see actually have that in there where you can look and see where the preponderance of transactions took place and where the kind of the average price should be based off of that. What are you looking for with regards to money flow?
I look at weekly highs and lows and weekly opens and closes. Those are going to be very high probability that there's a ton of money flow coming in there. And volume is, the average of both opens and closes. And so volume just, hey, if you're going to throw a large lot, out there, is it going to get filled? But really to know if there's like an opportunity to buy or sell, weekly lows, weekly closes, if there's a rally thereafter. So one thing we have to look at is what the market did after this data point they were referencing. So we're talking about referencing the data point, and it's what happened after. So after a weekly close, if there was a gap up or down, that's a significant amount of money flow coming in. So I think our minds, a lot of people read and think linear, and we really want to think kind of backwards, and that helps us identify what happened in the past to be able to anticipate what will happen in the future, and that can be a little bit confusing.
All right, I'm looking through here. I saw, was it No, you talk about State Street. What are you asking to look at the stock? What's with State Street all excited about State Street? I don't know. Okay, on that note, I'll go back to the discussion du jour, which was sectors and looking at kind of not chasing, but identifying what's working the best. Tillie gave some resources for you guys out there. You can actually go to FinViz has some great resources. I actually really like the one that's at barchart.com. I showed you that one just a little bit ago. If you are interested, you can, I'll bring that, there you go. Go to barchart.com. If you actually go down to where it says stocks and then go to market performance, you can see this chart. And you can turn off ones you might not be interested in. So let's say I don't like healthcare. I can simply turn healthcare off and that chart will adjust. And healthcare is now removed from the equation. I saw the STT. I just wasn't sure whether you wanted me to analyze it or you just tell me you're making money on that State Street trade right there. Here's State Street. A heck of a day out there today. Nice. Call that a little bit of a bullish engulfing. All right, Tillie, what's in your schedule? I know that you were going to be doing some teaching coming up here soon, although you're going to be in Kansas City until you get some online classes, right?
Yes. So it was so funny. I was telling someone the other day that since this whole pandemic thing, I have been at home more than ever, and I enjoy being around you guys. I love being on the show, and it gives me a reason to get dressed. So I got my Kansas City gear on today. Yeah.
Boo! Don't like the Chiefs.
Yeah.
We'll have to censor that.
Come on.
We gave you that Super Bowl. Damn it.
Right.
Uh-huh.
Hey, the Raiders kicked our butts, though.
Good.
Yep. I think it was the Raiders, right?
The Raiders. Yeah, the Raiders did a number on you. That's crazy. The Raiders.
I remember playing the Jets, maybe.
If you can't beat the Jets, you got no business in football.
And I love social environment. So this whole thing about, being at home and not having classes all the time, that's really put me in my element, and I've never been able to focus. It's amazing. You can really focus. That's great. But I love teaching online, so hopefully I'll get some online classes. If not, I'm in the center. We only have one class a month. They're very small. And though it really gives me time to focus on the other things and be a mommy and all those good, family fun things. We went to a track last week, and they did some vintage racing.
Ooh, vintage racing's fun.
Yeah, way cool.
Awesome. Well, thank you so much. And again, thank you for the market updates or market outlooks that you do on Sunday. Those have been absolutely fantastic. I look forward to putting those out for you every Sunday at 1 o'clock. So thank you so much, Tillie.
Thank you. I think that this week's low is higher than some previous highs. So that would be kind of bullish going. Hopefully, if we close higher tomorrow, that would be bullish.
We'll find out on your Sunday outlook.
Great.
All right, take care. Guys, that was Tillie Allison-Harris. She has been doing a lot for us on this show, coming on every couple of weeks, giving us some insights into markets and different things. Today we talked a little about sectors, sector scanners, which I think are very important, especially for anybody who's an intraday day trader. There's always something that's moving in the market. Even on the most flat day, there's something that's moving, and it's generally attributed to some sector or news within that sector. Today, it was definitely the energy sector, and you can find those tools on a lot of different websites out there. We looked at FinViz, we looked at TradingView, as well as Bar Chart, and if you have TradeStation, I could actually probably send you my workspace layout here for the overlay that I use. Obviously, we got a football-related crowd out there. Medic Man down. We're going to delete you from this podcast because you're a Seahawks fan. Geez. Seahawks. I'm going to put my 49ers wall up here soon just so you guys can all see that one. Okay, let me go through the economic announcements and earnings calendar stuff just so we can get that out of the way because there's a ton to talk about, especially on the earnings front. Now, here is what we had cooking for today. This is why we got off to such a bad start. The expectation has been that unemployment claims are going to continue to drop. They've been dropping fairly consistently. And all of a sudden this week we had a big pop to the upside in unemployment claims, meaning more people are now filing for unemployment, which, starts to make people a bit nervous. We also have this Empire State Manufacturing Index was worse than expected. So not a lot of good news out there for the U.S. markets. That, of course, caused a pretty significant gap down, and all of a sudden markets just rallied from there. So shrug off that bad news because that means we'll probably get some stimulus at some point. That was today. When we look at today's earnings, again, you had a significant amount of beating on earnings, right? Afria beat, Intuitive Surgical beat, Wall Street's Boots beat, Morgan Stanley beat, Charles Schwab beat. The only one that didn't beat was Taiwan Semiconductor. Other than that, everybody doing fairly well. Now for tomorrow, you have a few announcements that are pretty critical, I feel. The retail sales number for the U.S., I think, is very important, right? We are a consumption-driven economy. We probably want to see retail sales numbers increase. Even though Prime Day happened this week, we're probably not going to see that impacted there, although Amazon boasting about monstrous increases in sales over the Prime Day event. Of course, it's no longer Prime Day, it's Prime Days with an S. But that comes out at 5:30 Pacific time. That's 8:30 East Coast. So 1 hour before markets open, guys, you'll have retail sales numbers out there, expecting it to rise slightly. We also have industrial production, business inventories, University of Michigan, inflation expectations, and consumer sentiment. Quite a busy day out there for the U.S., including TIC long-term purchases, which I think is very, very good. And finally, for earnings for tomorrow, Schlumberger, you have Citizens Financial, you have Bank of New York, which I messed up and called that BlackRock. I don't know how I messed that one up on the other Monday Market Must-Knows. And then JB Hunt also reporting earnings tomorrow, and that's all before market open. Yes, people are asking. It was. I thought it was yesterday. It's actually tonight. So I will not be a part of the click review thing. I will be probably in there watching because I'm always curious to see what happens there. That's going to be Todd Davis and Mark Greco, two guys that don't need me in that room. They can hold it on their own for sure. There'll be a lot of great content, and I think what's interesting about the click webinar that you guys will see tonight is there's a lot of features and functionality in there right now that are certainly better than what's in the industry, but there's a lot of stuff that they're in the pipeline just about to roll out that I think is just fantastic, especially if you are Mastermind or in multiple XLTs and you have access to the Mastermind grid integration of a lot of these pieces is just absolutely fantastic. Plus, they'll give you some insights as to where they're going and get you more updates. So that will be tonight. Yes, I know Seahawks are 5-0. Just saying, Big Eb, and that's what happens when you lose 9 of your starters the first week of the season. But hey, I'll be a fan no matter what. All right, that will do it for me, everybody. I'm going to wrap it up for today's show. I hope that you enjoyed Tillie Allison. I believe that click piece, let me really quickly look because I actually have it up here right now. Fall webinar series. It's at 4 p.m. Pacific, so you've got an hour and 15 minutes for that one. That'll be on What's New with Click. So there you go. You have an hour and 15. Find that in the My OTA section. If you guys are OTA graduates, you can find that there. All right, that's going to do it for me, everybody. Tomorrow is going to be a weekend edition. I will be here with a nice glass of whiskey. I've actually had a pretty good trading week out there, so I'm happy with that. Hopefully I don't jinx it and destroy my trading this week on tomorrow's session, but it'll be an open invitation to you guys to bring up different topics. The more that you send in, the earlier you send those topics in, like now underneath the YouTube video, or send them in to me at TraderMerlin.com or TraderMerlin@gmail.com as well. Send those on in, and I will get to as many of those as I can, and the sooner you get them in, the more I can build out content for tomorrow's show. That'll do it for me, everybody. Have a fantastic evening. We'll see you tomorrow for the retail sales announcement. Take care. And I know you all love my shirts. That's right. Vietnam. Thailand.